political uncertainty, but it certainly, I would agree with the finding that it has been weak.
So, are emerging markets in for a relief rally today? That seems a likely scenario, what with the Bank of Japan also committing to loose monetary policy for now. Let's get out to Reg down in the newsroom for a preview of today's action.
Well, that is $1 million question, Dean. But one thing is for sure, loose monetary policy is definitely a boon for emerging markets like the Philippines. Take it from how the session played out on Wednesday. Take a look at that PSE index pushing higher, back up to 76, 75 right now. There wasn't a whole lot of volume to begin with a lot of investors staying on the sidelines precisely because they weren't sure exactly how the BOJ and the Fed would move. The BOJ, though, giving investors something to cheer about when they decided to extend monetary stimulus and refrained from pushing interest rates deeper into negative territory. Now, when I say extend, I mean that the BOJ will keep its asset buying scheme and try to control bond yield curves instead. So all of that giving a fillip to the local bourse. If you take a look at how we performed, there's a lot of the big oil and energy firms, Aboitiz Equity Ventures, Semirara Mining Corporation, pushing the local bourse higher, and you know, a lot of that. This is one of the few days that this week that we have ended not in the green. But even that, though, wasn't enough to convince foreign funds to keep their money here. Here on my left screen is the other chart that we have been tracking quite closely over the last month. I'm talking about foreign fund outflows. We're up to 20 straight days of outflows now. And on Wednesday alone, these international investors pulled $7.3 million out of the local bourse. Most of the analysts we've spoken to have pegged that to policy uncertainty from these two major central banks that we have been talking about. But also, a handful have said that domestic policy uncertainty is also a contributing factor. In other words, President Duterte's controversial remarks about international bodies and the probe of extrajudicial killing possibly hurting sentiment. So again, the big question right now is, can we count on foreign investors to pile back into Philippine equities now that the Fed has made its decision? Well, answer is not so fast. Remember, what we know of the Fed from this latest decision is that policymakers are now heavily divided over the timing of the liftoff. So the way to read their next moves from here on is to look at this dot plot, which tracks exactly how policymakers, each of the 17 members of the FOMC, are projecting rate increases and how they're planning to work out policy over the next few months. One thing that we picked up from Yellen's speech is her saying financial stability is moderate and that leverage is not building up. So take a look at this. This is 2016. Might be a little too small for you, but you can see all the little dots here, which means the vast majority of policymakers expect at least one more rate hike this year. In other words, we are not in the all clear. Also, what that could mean for Janet Yellen is that the next time these officials meet, and there are only two more meetings left on the calendar, that's November 2nd and December 14th, Yellen may be hard-pressed to push back against a rate hike. And that in turn could pressure Philippine stocks once again, which at this stage still remain some of the most expensive in the region.
Well, whether or not President Duterte's rhetoric is scaring away investors, the economy is on solid footing. S&P said as much when it affirmed its credit ratings for the Philippines. While this brings some relief, it doesn't eliminate the risks. Quintin joins me now for the details. So some good news there, but it sounds like there's a caveat coming.
Well, you look at these rating agencies, when they do make pronouncements, they have these collatillas or qualifications just to keep policymakers on their toes. I mean, you think about my favorite author, Thomas Carlyle, what is earned cheaply is esteemed lightly. So at the end of the day, they did talk about the positive outlook on the fundamentals, but then again, building on what Reg is talking about, some policy risks out there to be watched on. Having said that, though, you think about the holy trinity of ratings agencies. We're still in investment grade, stable to positive, even Fitch has even put us up a notch. The interesting thing there is this is a two-year outlook. Question is going to be, what are the underpinnings of this? And that's where the collatillas come in. You're talking about basically a 10-point plan that they're still waiting to see fleshed out, which he did in the beginning of the administration's pronouncements. the quest for a law-abiding society. Again, that's the gray area in terms of putting a rule of law, and all these aggressive, muscular approaches on drugs is going to be an issue. And at the end of the day, you're also going to look at the orthodox macroeconomic policies that really was inherited from the past two administrations. But the question is, how much further are they going to take it, especially with regard to increasing investor sentiment?
And of course, affirmed strong fundamentals of the Philippines. Now, what advantage does that bring us, and for how long is that sustainable?
And one of the things they looked at, obviously, as a ratings agency is the numbers. And they did note at the end of the day, the government net debt burden is down 10 percentage points from a record high of 28% down to 18%. So you look at increased tax collection, you're also looking at fiscal reforms of the past administration. That really basically gives them the wiggle room and also the comfort to say the government has enough in its place to do this. Having said that, they did mention the downside risks. Downside risks and tails, as they mentioned, like a storm, it's the tail that gives a kick in as a backlash, and that's what they're worried about, and that is infrastructure gaps, logistics, and basically putting this across the archipelago, and obviously a diminished certainty when in regard to policy reforms, given those pronouncements Reg talked about earlier, EU, US-ASEAN summit, and that is anathema really to investors, all this uncertainty. Having said that, if we get our act together, according to S&P, they think that we can breach the $3,000, the magic middle-income level threshold of $3,000 per capita, basically by the end of 2016, and get it up basically to close to $3,500, really in middle-income territory, stable, steady state, if we close that infrastructure gap and put those policy reforms in place to make sure that everybody just breathes a sigh of relief as to where the administration is going.
All right, am I getting ahead of myself? But I wanted to ask, is there any chance of an upgrade? And, well, we also want to know what our policymakers have to say.
That's where the rub is. At the end of the day, the two-year pronouncement also is a qualification that they won't likely increase, their credit ratings in the two-year horizon. They said one of the things they're looking at really is the fiscal improvements to basically make sure that either foreign direct investment comes in because of the certainty, but at the same time, businesses have an easier time in terms of paying taxes, and that government funding is sustained because they have a very robust budget to fund. That's going to be interesting to see also, because at the end of the day, the government wants to lower personal and corporate income taxes, but the revenue side is a bit of an issue. Now, the interesting thing is the Bangko Sentral has obviously put its steady hand at play, and Tatanco did mention in a text message to our reporter that deeply rooted structural reforms in the last administration have put this together. Again, the foundation is there. But where the interesting quote there is, Gene, and you talked about how the government reacts, is Secretary Dominguez, who is really the bulwark of the economic policy. He was saying that, look, just if you see through the noise created by negative headlines, and we all know what those negative headlines are doing to portfolio outflows, for example, he, being the investor, may have a better comprehensive understanding of the exciting positive changes that are ahead of the Philippines. Again,
interesting how he calls President's statements as noise.
Absolutely. So the interesting thing is, can we go through the noise? Can these fundamentals outshine investor sentiment? And at least for now, having said that, even without an upgrade, there's some breathing space for now.
For now. So it's very interesting to see how we can move forward, because, it's also a big concern for them to have raised that.
Yeah, fundamentals versus noise. That's something to watch out for the next few weeks and months.
Right. Thanks, Quintin. More mines could be facing suspension on top of the 10 that have already been shuttered. That much the Environment Department has made clear, even as it postpones, releasing the results of its nationwide audit once again. Shyla Francisco has more.
12 more metallic mines have been recommended for suspension as a result of a government audit. These mines, mostly nickel and in Mindanao, may be shut down for environmental violations, inadequate mining practices, and failure to comply with social development efforts.
Nickel kasi ang pinakamaraming mina. Sa 40, ang nickel ay 28. And then second, yung nickel kasi open pit mining. So mas prone to risk siya kaysa sa underground.
Following the announcement, nickel prices pared losses Wednesday, as the new suspensions will lead to lower shipments from the Philippines, the world's top nickel supplier. The new batch recommended for suspension is on top of the 10 companies suspended since Environment Secretary Gina Lopez ordered a review of 40 metallic mines in the country. The results of the audit on the remaining 18 firms, which include Taganito Mining Corporation, Nickel Asia Corporation, and San Roque Metals Inc., are still being scrutinized, and it will probably be announced on Monday, Hasareno says. Lopez defends the delays in the release of the audit results, saying the agency is now drafting recommendations for each mining firm. including measures they must undertake to improve their operations and meet stricter environment standards, among others. The companies will be given a chance to defend themselves before their operations are suspended, Hasareno says. The DNR aims to be stricter when it comes to violations, so as to meet or even surpass mining standards in other countries like Canada and Australia, Lopez says.
In other countries, when there's a violation, they come down strong. Here in the Philippines, okay. And that's why their mining industry is the way it is, no? Very, very lax. So we're going to come down strong on violations. And even if there's been compliance, I'm still going to push it a little bit further. We want to shift the standards. Only just as good as Canada, better. We should be better. Why? Because we're in a geohazard zone.
The Chamber of Mines, meanwhile, remains optimistic that its members will pass the audit. Since President Duterte named Lopez a known anti-mining advocate in the DNR post on June 21, shares of mining firms have plunged 9% up to Wednesday's close, underperforming the broader index, which has inched up 0.13% in the same period. With the audit results finally set for announcement on September 26, miners are hoping the worst is over. Shaila Francisco, Bloomberg TV, Philippines.
In the meantime, miners have begun to fret about the government's plans to raise excise taxes on minerals. Chamber of Mines Executive Vice President Nelia Halcon told Business World that the move could offset their gains. The Philippines currently collects from miners an excise tax of 2% of the actual market value of copper, gold, and iron ore. It might even prompt investors to rethink their plans and move to Vietnam instead. Stronger economic and financial cooperation between the Philippines and Spain is in the offing. Finance Secretary Carlos Dominguez says the two countries are expanding their earlier agreement on defense, tourism, and information and communications technology. Spanish investors are particularly interested in local rail projects, but are also exploring opportunities in the agriculture and energy sectors, as well as in climate and disaster risk finance. Philippine representatives in Moscow met with the Russian military to discuss possible cooperation. The Foreign Affairs Department said acquiring military equipment, training, and technology transfer were discussed in the meeting. Last week, President Rodrigo Duterte said he's considering purchasing arms from Russia and China and asked U.S. troops to leave Mindanao. Now he's backtracking on that comment.
I never said get out of the Philippines. After all, kailangan natin yan sila dyan sa China. Wala man tayong mga armaments. We are not also ready to go to war with China. Ako, ayaw ko. Kasi it would just be a massacre. Wala yan natin for display. Wala namang missile yan. So we cannot use it. I really do not know what's wrong with this American pagtingin nila sa atin. When
we return, Visa adds another branch to its 3 existing support and service centers worldwide, and it's in Metro Manila. And the Fed stands pat once more, while the Bank of Japan wants a better grip on bond yields. What's all that mean for the rest of the region? We'll speak to an economist from Hong Kong about that.
Enjoy the open road with NLEX SE-Tex Road Trip Hacks. Explore a hidden paradise. Seek out unique and interesting restaurants. Just try not to lose your way. Nothing is more frustrating than driving for long hours only to realize you've been driving the wrong direction. Luckily, traveling to unknown territories is easier nowadays with navigation apps. Be aware, do your share. Enjoy a seamless ride to the north.
watching First the Philippines. It hasn't come to pass yet, but the maiden bond offer of Double Dragon has already received a AA grade. The Philippine Rating Services says Double Dragon got the second highest rating because of its clear strategy to grow the company. Double Dragon is planning to raise as much as 10 billion pesos this year to fund its target to reach 1 million square meters of leasable space in the next 5 years. Meanwhile, shares of DNL were downgraded at Macquarie. The stock call was changed from outperform to neutral with a new target price of 11 pesos and 30 centavos per share. Currently, 7 analysts surveyed by Bloomberg have a buy rating on the stock, while 3 are advising their clients to hold.
Here are the other corporate stories we're tracking. SM Investments is tapping the debt market before the year ends. It's planning to issue 15 billion pesos worth of 10-year bonds with oversubscription option of up to 5 billion pesos. This is the first tranche of the 50 billion peso bond program approved by the board. SM will use the proceeds to expand its non-core businesses such as hotels and convention facilities. Visa has opened a new business processing hub at the SM Mall of Asia complex in Pasay. The site is one of only 4 Visa service centers providing 24/7 support to clients worldwide. It currently has 570 employees. And ABS-CBN will open its first immersive experience center in Trinoma next year. The ABS-CBN Experience Store is a partnership between a broadcaster and Ayala Malls, and it will allow fans to play the roles in the shows they watch. The store will also sell ABS-CBN merchandise and become an events hub. Well, that's it for now. We'll bring you more corporate news later in the show. The Federal Reserve kept rates steady, but Janet Yellen's statements and a divided vote signaled that a 2016 rate hike is still on the table. To discuss this and other central bank strategies, Carlos Casanova, economist at BBVA, joins us from Hong Kong. Hello, Carlos. Good morning. So how are you reading the Fed's statement?
There was no surprise that the Fed decided not to make a move this meeting, and the reason for that is they were juggling basically conflicting sets of data. So on the one hand, the employment market has been performing quite well, but on the other hand, inflation remains low and well beyond the 2% target, and has remained below this target for approximately 4 years now. And in addition to that, we had some disappointing data over the summer pointing towards sluggishness in the manufacturing and service sectors. So all in all, they've chose to be a little bit more conservative and hold on for now, also in light of the upcoming presidential election, to try to avoid creating more volatility in the markets.
Given that, as you mentioned, there were 3 dissenting votes and also inflation, they've even downgraded their inflation outlook for the year to 1.3 from 1.4. So how do you see them moving in the latter half of the year? Do you see them actually increasing rates, given, as you mentioned, the elections?
Yes, so despite the point on lowering the inflation outlook, because the economy has been behaving well in other areas, the possibility of another Fed rate hike in December has increased. It's not 100%, but a 60% possibility that will increase rates again in December.
Now, talking about inflation as well, Japan has also failed to meet their 2% inflation target, but the Bank of Japan came out saying that they actually want to overshoot that target. What are your thoughts on the BOJ's moves?
So the most important thing that came out of the BOJ meeting yesterday is perhaps the move away from that monetary-based target towards targeting the bond yield curve. So what that means in practice is that instead of having to purchase JGBs at an annual pace of 80 trillion yen, they will do this at whatever pace that new target of around 0% is achieved. So why is this good? It's good because BOJ can avoid some of the limitations associated with purchasing JGBs in the secondary market. BOJ already holds 40% of all of the JGBs in circulation. But at the same time, it creates this expectation of inflation in the long term. It creates this expectation that interest rates will remain low in the long term, and it avoids a bearish increase in the bond yield curve.
But the BOJ is also facing some credibility issues. So if this doesn't work, what's left for it to do? Does it have any ammo left?
In a sense, it was a difficult decision for Kuroda because doing nothing would have accounted to perhaps a political misstep. Kuroda implemented negative rates in January, and they were not received very positively. So doing nothing would have amounted to admitting his failure. At the same time, going too far by implementing helicopter money, for example, would have been less palatable for global markets. So this outcome, which is tweaking of the pace at which they purchase JJBs and with some other qualitative measures, is perhaps the most suitable step at the moment. Now, they do mention in the statement that they will lower interest rates further if they consider it necessary. However, this is most likely in the statement to try to fuel the expectation of further monetary easing. It's unlikely that Kuroda has the political capital at this point in time to go ahead and push for lower interest rates.
So the question next is, what does this all mean for us? Now, the BSP is expected to hold steady in its meeting today, but given all those statements, including what the BOJ said about negative interest rates, how do you see this changing the central bank's policy setting in the short term?
To be honest, I don't see the need to do anything at the moment. The Philippine economy is set to overshoot growth expectations this year. It's growing comfortably at around 6.4%. And while a lot of that was up-fronted in investments ahead of the election, it will still grow at a significant rate in 2017. We're expecting around 6%. And inflation's remained, on average, around 1.5% in the whole year. So BSP can afford to not hike rates at the moment. Now, we have seen significant capital outflows from the country in the last couple of months. So if the Fed does decide to increase rates in December, that will put pressure on BSP to become more hawkish in 2017 or risk more outflows.
Thank you very much, Carlos Casanova. Always appreciate your analysis. Economist at BBVA. Still to come, after months of delay, the NAIA Expressway is now open for business. There's a little perk too for the first drivers on the new highway. We'll tell you about it after the break.
Have you ever looked for a hotel online? Did you notice that there are so many different prices for the exact same room? Trivago does the work for you and instantly compares hotel prices for more than 200 booking websites. Just download the Trivago app or go to Trivago.com, type in where you want to go, select your check-in and check-out date, and search. Trivago now shows you all the different prices for the exact same room. That's how you can be sure to find your ideal hotel for the best price. Hotel Trivago.
First up, after several delays, a portion of the elevated NAIA Expressway finally opened Thursday midnight. Jen Kalimon was there at the opening and caught up with Public Works Secretary Mark Villar.
During the first section of the NAIA Expressway Phase 2, which is expected to connect and decongest the traffic situation around NAIA, is finally open to motorists and commuters starting today. This project connects Macapagal Avenue and Entertainment City in Pasay City to NAIA Terminals 1 and 2. This project has gone through several delays because the first phase should have been completed in March 2015. We have with us today the Secretary of the Department of Public Works and Highways, Secretary Mark Villar, to give us an insight regarding this particular road project. Good morning, sir.
Hi, good morning, and welcome.
Sir, what is your assessment for the pre-operational inspection of this road project?
Well, we're very happy that it was successfully implemented in just in time. That's why we came here at 12 midnight exactly to make sure that there's not even a 1-minute delay. Ang utos po ni Presidente, walang delay sa mga project, and that's why the DPWG is here personally to make sure that it's delivered on time, so that people can start using. In fact, people can start using this road now. So we're expecting that may dadaan na traffic po dito.
Sir, what are the chances that this particular project could actually ease the traffic situation, particularly in the southern part of the metro?
Well, we expect up to minimum 40,000 vehicular traffic a day because of the airport. So I think this is one of the many decongestion projects that we can expect over the next few years. The President is committed to decongesting our urban areas, and this is definitely a step in the right direction.
Sir, how about the toll fees? I believe this is toll-free for a month?
That's the commitment of our concessionaire, and it's free. Well, kanina wala akong bayad, so free.
The construction continues on the second segment of the NAIA Expressway Phase 2 heading towards SLEX, and the government is determined to finish the entire project by the end of the year. Jen Calimon, Bloomberg, Philippines.
Time now for some national headlines. President Rodrigo Duterte says nearly 40 local judges and several Chinese nationals are in his latest narcotics list. It's now up to security forces to deal with these personalities. Duterte earlier said 1,000 names are part of his third narco list. The list is still being validated. And 5 more convicts took to the lower house Wednesday to test Senator De Lima's involvement in the believed drug trade. The new witnesses say convicted carnapper J.B. Sebastian collected funds from inmates to help raise funds for Lima's Senate bid. The embattled senator filed a resolution in the Senate asking the UN to conduct an independent investigation on extrajudicial killings. And another Abu Sayyaf captive has been freed. Military forces in Sulu rescued local businesswoman Martina Lin Yi, who is two days after she was abducted in Zamboanga del Norte. They also seized the speedboat used to transport the 60-year-old entrepreneur. He is now back with her family. And that wraps up our national headlines at this hour.
The president softened his stance on U.S. presence in Mindanao, saying he never asked the U.S. troops to leave. Well, at least for now. That's just one of his many controversial statements against the U.S. To make sense of how all this plays into the U.S.-Philippine relations is security and defense consultant Jose Custodio. Hello, Jose.
Hello.
A very difficult task maybe for you. So just looking at some of these statements. So first, how are you reading his softening stance on the U.S. presence in the South, saying that we need them for the South China Sea, and yet ending joint sea patrols in the South China Sea?
Well, for example, in the case of joint sea patrol, for starters, it's like this. Okay, you have the rhetoric coming from Malacanang. Okay, one thing I can say about the rhetoric was that despite the fact that the rhetoric was ongoing, there were a number of key engagements that were going on between the Philippines and the United States. For example, while we had that issue between Obama and President Duterte. Yeah. At the same time, the AFP was hosting the a PACOM initiative, or Pacific Command initiative, which was the Chiefs of Defense meeting. So those were the activities that were still ongoing. So they were never put on hold.
So you're saying there's a disparity between, what's being said at the top level and what's actually happening on the ground?
What happens on the ground, it continues. Okay, all the activities that have been programmed are continuing. There's been no rollback or no suspension of such activities. The thing is that even in this month, there's supposed to be high-level meetings that will be conducted between the U.S. and the Philippines. So that is what I can say about the with the rhetoric and the actual things happening on the ground. Okay.
But now we also have the president mentioning before that they're looking at purchasing arms from Russia or China, and now we have on the news the Russian Federal Reserve for Military Technical Cooperation actually, briefing the Philippine Embassy in Moscow on possible military cooperation now. How do you see that affecting U.S.-Philippine relations?
Negatively. No, there will be no effect on that because...
Even if we've usually purchased from the U.S.?
Well, because the Russians have been trying to sell to us since the 1990s, the early 1990s, when we had the first modernization programs being launched in the early 1990s. Actually, a Russian demonstration team came to the Philippines, bringing in a Sukhoi 27 and a MiG-29. That's 1991, long time ago. And since that, they have not been able, to clinch a deal because of the fact that you're talking about absorption. In a weapons acquisition thing, you're talking about absorption also of the weapons. The AFP itself is a Western-oriented institution. It's equipment, it's material, it's basically U.S. or Western or European. So that being said, if you have something from another country that brings it adds to a logistic problem, because you have to have a different sorts of spares and supplies. So as much as possible, given the fact that the AFP itself is operating on a limited budget, okay, then as much as possible, you try to keep your logistic lines or logistic supply lines on a much standardized manner. So it's nice to consider other options, but at the same time, this will have to be reviewed by the AFP or the D&D AFP Bids and Award Committees. They will look at if it's really suitable, if it's cost effective.
So in other words, it's not yet a done deal.
It's not. All of this will still have to be reviewed by the necessary agencies.
Now the president is scheduled to visit Thailand and Vietnam at the end of the month, and possibly Japan. How are you seeing this, along with the seeming disparity between his approach with the ASEAN as compared to Aquino? Aquino taking a stronger stance, wanting the ASEAN to have stronger words against China. But this time, he has a more reconciliatory tone.
Well, the thing is that, like for example, you were talking about the joint patrols, and you were talking about let's talk about the joint patrols and also the 12 nautical mile thing. I would assume that this would be, if I would interpret this would be like paving the way for mutual dialogue between, or bilateral talks between China and the Philippines. But I would assume that Lorenzana, the Defense Department team, the National Security Council team, led by Esperon, they will be providing guidance also to the President regarding how to deal with China, given also the track record of China. So we do have these bilateral things. We have this, the term that they would use there, or confidence-building measures, like something that, it's a term that's also very old already, and it started coming out when we had problems with China, okay? And the thing is that I think we're trying to open the lines of communication to China again, following to see what we can get out of talking with them. But I believe that they're also vigilant enough to know what would be the pitfalls if China does not become true to its words.
Well, talking about confidence building, you sound still pretty confident about their Philippine, foreign policy at the moment. Thank you so much, Jose Custodio, for being with us. Up next, a new study finds that Filipino firms are the most upbeat in Asia. We'll tell you where we're beating the odds next.
In the Loop is actually a curation of all the key business stories in the day, whether it be markets that have closed and also markets that are to begin.
So we discuss what went on during the day, as well as other pieces of news or other pieces of information that could possibly affect the way businessmen think.
Sean and I as anchors also participate actively in the synthesizing of the stories.
Of course, aiding us is the Bloomberg Terminal, which is a big plus to us here in Bloomberg TV Philippines.
Making sure that we have the right stories, the best angles, the best analysis for our audience.
Hi, I'm Sean Yao.
I'm Tintin Pastrana.
Watch In the Loop Mondays to Fridays, 1 p.m. on Bloomberg TV Philippines. Only on Signal.
This is First Up Philippines, revisiting our top stories. S&P has reaffirmed its credit rating for the Philippines on sound fiscal footing. That leaves local debt at BBB a notch above minimum investment grade. But the ratings agency did say the crackdown on drugs could undermine rule of law in the country. Finance Secretary Carlos Dominguez says investors need to go past negative headlines. 12 more mines could face suspension for environmental violations. The DENR says most of these are nickel miners in Mindanao. It will release the results of its official audit on Monday, September 26. For now, mining shares are rallying on bets the Bank of Japan's decision will boost demand for raw materials. Regional markets poised for a relief rally after the Fed kept interest rates steady for a sixth straight meeting. Chair Janet Yellen says they want to see more evidence that the U.S. economy can handle potential shocks. Yellen did signal at least one rate hike within the year. The dollar slid in early offshore trade. Let's see how U.S. markets fared on the back of the Fed decision. Julie Hyman has the wrap from New York.
It was broadly expected that the Federal Reserve would not raise rates, but the commentary and what the various Federal Reserve governors said was quite interesting, including the fact that 3 members of the Federal Open Market Committee dissented. That is, they thought that the Fed should raise rates at this meeting. That and the fact that the Fed portrayed the risks of the economy as more balanced is leading a lot of investors to speculate that December is now more likely than not for a rate increase. Of course, as always, the Fed cautioned that their decision-making is going to be data-dependent. Stocks rose to the highs of the session by the end of the session, although there was quite a bit of volatility bouncing around in between, with the S&P 500 sort of gyrating in the wake of the commentary and, of course, during the press conference by Janet Yellen as well. We saw similar bouncing around really across asset classes. If you looked at bonds, we saw some gyrations in the wake of the statement being released. The 2-year yield finishing little changed. However, on the longer end of the curve, the 10-year and the 30-year, we saw yields push back a little bit, not a huge amount, but a little bit in the wake of the statement. As for the dollar earlier weakened, of course, from the other central bank decision that we got over the course of the day. That is from the Bank of Japan. So we saw the dollar in particular weakening versus the yen, and then it once again fell to the lows of the session versus a broad basket of currencies after we heard from the Federal Reserve. And finally, oil is worth mentioning as well, not just because of the Fed strengthening on the dollar's weakness, but also because of some more fundamental news. The weekly stockpiles number in the United States falling to a 7-month low, and so that then gave further fuel to oil prices over the course of the session, as it did strengthen pretty dramatically as the day went on. Julie Hyman, Bloomberg, New York.
Business sentiment in Asia is improving, and guess who's leading the pack? Reg and Kinden join me to break that down. Drum roll, please.
I have a feeling you know the answer already, and that is yes, correct, the Philippines. Filipino firms the most optimistic of the lot, according to the study by Thomson Reuters /INSEAD, which we gathered off of Business World. So take a look at that, the sub-index. The score, this is, by the way, the 5th straight quarter that the Philippines has taken the top spot. Sub-index reading at 94, the average is just at about 86. That should be 86, not 68. The Philippines, in case you were wondering, the second placers were China, Australia, and Indonesia. And guess who is the most pessimistic of the lot? Well, Singapore.
Wow.
That is to be believed. Yeah, correct. That's according to the study. But anyways, the point is, coming back to the Philippines, if firms are encouraged by stronger than expected economic growth, it comes back to what the finance secretary and the other economic managers keep talking about with sound economic fundamentals. Only 8 in 9 firms provided a positive outlook for business over the coming 6 months.
Okay, but in terms of sectors, how is this optimism spread across those sectors?
Well, you think about it, the overall ranking, it used to be at 45 when it started in 2009. Now it's above 60 to 70%. And that is generally the average for all the sectors that we looked at. Having said that, though, there are gainers and losers. If you think about, you look at, for example, property sector, tech and tel, and energy, basically infrastructure sector, and also basically with a rising middle class in the region. And note that region also includes Australia in the sentiment
So
index.
this is not just for the Philippines, this is for the entire region.
Absolutely. So real estate and tech is on 1-year highs and energy on a 2-year high, perhaps also buoyed by the fact that energy firms are getting as Julie Hyman mentioned, a big boost in terms of energy oil prices going up. So you're looking at optimism, 5 percentage points here, around 12 here, and basically 7 points here. Now, having said that, there are also indicators in terms of how other sectors are doing, given the fact that there's a slowdown in certain sectors. Let's look at the next chart on the losers bit. You're really looking at one of the things, retail, leisure, and possibly leisure because the gaming industry also, there's been a crackdown in China, slowdown also in terms of the VIP gamers. That's gone down quite a bit. Here, you're looking at around a 19% decrease. Financial firms, obviously, lending activities are going out differently in terms of interest rates in different sectors as well. So there's not much pump priming in terms of some sectors across the region. And then automotive going down by 3 percentage points. A lot of that has to do also with increased regulations, the fact that you have all these ride-sharing apps and interesting technology applications as well for manufacturing.
So what are the biggest risks? Despite this optimism, what are they worried about?
I knew you were going to ask me that. So for Filipino firms, it's interesting. They cite 3 things. Number 1, forex volatility, particularly at a time like this. Well, now we know what the Fed's going to do or has done, and so that's kind of been put to the sidelines somewhat because there is another rate card on the horizon. But even so, over the last several months, it has been foreign exchange volatility. Number 2, fluctuation in energy prices. And number 3, rising competition. That's just what Filipino business firms are seeing as the biggest risk. Now, if you take it in the context of all of the Asian firms and what they generally see are the biggest risks in the horizon, it's interesting because it comes down to policy uncertainty. When they say policy uncertainty, they actually mean, number 1, the prospect of a victory by U.S. presidential candidate Donald Trump, and number 2 as well, they cited fluctuations in the energy market.
Now, when you said actually policy uncertainty, I also got worried for the Philippines there because of what S&P highlighted.
Well, they've localized that risk as well. I mean, you look at all the analysts talking about policy uncertainty, diminished role of democratic institutions, and instability and unpredictability. But one thing also to look at is, is our biggest trading partner going to suffer as well because of the rising corporate debt? That happens to be risk number 3 in terms of the global firms. Certainly in the Philippines also, especially if they want to increase exports, which is one of the key concerns S&P raised as well.
Well, it's definitely, well, for one thing, we're looking at pictures of China because that is one of the external risks that S&P had highlighted, saying that a sharper rather than expected slowdown in China could definitely eat into the Philippines' economic growth story.
Yeah, and I find it interesting that second, most optimistic was actually China, even despite that risk. All right.
But the China index is above 50% for the first time in a few months. So it'll be interesting to see how it goes.
Well, we're still tops. All right, thanks, guys. Speaking of business sentiment, the British Chamber of Commerce says UK investors are warming up to the Philippines. A closer look at what they want to invest in next.
Once the market rings its opening bell, we'll be here for you.
Insights and analysis from the pros.
Fearless forecasts of our top performing stocks.
Because getting knowledge ahead of the pack is your edge. Starting weekdays, 9:25 a.m. here on Bloomberg TV Philippines, only on Signal.
First up, Philippines. Here, the other stores making headlines around the world. Tackling all diseases by the end of the century is next on the Chan Zuckerberg Initiative's agenda. The Facebook founder and his pediatrician wife will invest $3 billion over the next 10 years on healthcare, focusing on big killers like cancer and infectious diseases. $600 million of that fund will also be used to put up a biohub, a disease research center in San Francisco. The Paris Climate Agreement has taken one step closer to ratification. 31 nations officially signed the deal at the UN General Assembly in New York,
bringing the total pledges to 60 countries. Only 55 nations now are needed to ratify the rest of the deal. The 60 signatories, though, only represent roughly 47% of global emissions, short of the needed 55% for the deal to take force. And the New York and New Jersey bombing suspect Ahmad Khan Rahami was charged with bombing and use of weapons of mass destruction. The complaint filed in the federal court also said Rahami took inspiration from former al-Qaeda leader Osama bin Laden, and that he also planned attacks since June, acquiring materials for his devices via eBay. That's the roundup of world headlines today. Despite international attention on the country's war on drugs and human rights issues, investors from the UK remain upbeat on the country's prospects. Bev Natividad finds out more about the UK's positive outlook as she spoke with Chris Nelson, the executive chairman of the British Chamber of Commerce of the Philippines.
There's a tremendous interest in doing business from the UK in the Philippines. I've just come back from 2 weeks in the UK. During which I met a number of chambers, all of which had companies wanting to do business in the Philippines. Yesterday, the day I got back, there's an all-parliamentary party delegation visiting, 4 MPs and 2 from the House of Lords. That follows on from the trade envoy for the Prime Minister's trade envoy, who's Richard Graham, who was here in August. So the interest level in the Philippines from the UK is actually going up substantially. And to be honest, that's in line how exports and business is going up. Exports in 2015 in the Philippines grew between the UK by 38%. That's the second highest in the world. So I'd actually say that the interest of the UK and vice versa is growing all the time.
So would you say the recent developments have affected the sentiments of the Chamber members?
I don't see that personally. All I can tell you is that I've seen the interest level. Look, the UK is also, as you know, we had the vote on Brexit on the 23rd of June. The UK has made it very clear that it intends to grow its trade. That makes partners around the world particularly encouraging, such as the Philippines. And let's not forget, there are Philippine companies who are investing in the UK. We know that Andrew Tan's Alliance Global bought White & Mackay. We know that Mondanisa has just bought Corn. So I think the interest level between the two countries is actually, I would guess, at an all-time high. We run a project to encourage small to medium-sized companies, and we've had over 1,000 inquiries since we've started this project who wish to do business in the Philippines, and every day we're getting more inquiries and more interest.
Apart from good macroeconomic fundamentals, what sectors do you think are drawing the British business interest here in the Philippines?
I see growth, obviously, in infrastructure, obviously development projects. We know that the administration wants to spend heavily on infrastructure. We've been very successful with the Great British Campaign, introducing food and drink and consumer brands to the Philippines. I also see education. I think there's a lot of opportunities in education that UK institutions can bring in. So I think there is multiple sectors, also pharmaceutical and medical.
We were talking about risks a while ago. You said there's Brexit at your end. There's also sluggish growth coming from Europe. How are you gauging all these risks and doing business here in the Philippines?
Let me put Brexit in its right context. Obviously, that had, as we can see, a short-term impact, but actually, from what I see of recent figures, growth is back. I think what it does do, though, is make people very clearly look at markets outside of Europe and therefore gain in that aspect. And I think the Philippines and the UK are set to do well. Yeah, there's always going to be challenges from other major economies such as the US, possibly China and Japan. But I do think that in the particular context of the UK and the Philippines, and the opportunities far outweigh the risks.
Are there challenges that you foresee ahead?
We're dealing or promoting heavily small to medium-sized enterprises. Those companies obviously have got to be very sure of a business. They don't have obviously the financial resources of a large corporation. They need assistance on trying to get a partner, trying to establish a business quickly. I think the Philippines is taking steps in that respect. Again, I was at a presentation by Bill Lutz, who heads one of the co-chairs on the competition. And, you know, we fully support those efforts to cut down on red tape and to make companies establish quicker. Those are the general challenges.
After the break, USAID's STRIDE program is looking to give away more grants for science and technology projects. The details next.
What's the best way to sell your product?
Can you give us a more in-depth definition of event marketing?
Customer is king. Your brand is your queen.
What strategies can help tell your brand story?
Branding is just all about consistency. Leveling up what you've been doing every time.
How do you attract, engage, and earn the trust of your customers?
It's really putting the brand out there for consumers to connect.
Go deep into the challenges of branding and marketing.
The brand does not make the product makes the brand. I'm Rod Nepomuceno, and this is Insight.
Tuesday nights at 9 on Bloomberg TV Philippines.
The Philippines. It moved ever so slightly, but at least it was in the right direction. The VSE main index inched up by 0.5% to 76.75, with the all-share index adding close to 7 points. MRC Allied still one of the top movers on that index, with a surge of 12.6%, bringing it to its highest close since March 2012. It tripled its capital in August to diversify into hydroelectric and solar power. Now, Corporation climbed more than 9%, its biggest jump since August 10, bringing it to 408% up year to date. It announced it will create and issue preferred shares to raise capital, but the number and conversion ratio has yet to be announced. SM Investments reversed most of its gains at the start of the week with a drop of 1.7%. It plans to issue 15 billion pesos of 10-year bonds with an option of adding 5 billion pesos more. Moving on to term deposit auction on October 5, the central bank beefed up the auction size to 110 billion pesos from the 90 billion pesos set each week in September. 10 billion pesos of the 7-day term deposits will be offered and 100 billion pesos of the 28-day deposits. Now, in its third year, the 1.3 billion peso USAID STRIDE program aims to contribute to economic progress by encouraging scientific research. Bim Santos talked to the project's head, David Hall, about how science and technology can fuel economic growth.
The objective is to spur inclusive economic growth in the Philippines by improving the quality and quantity of science and technology research in Philippine universities. So far, we've done a whole lot of things. The biggest thing we've done, we've awarded 55 research grants to Philippine universities. But more importantly, they're all in collaboration with either Philippine industry or a US university. What we want to achieve is that by the end of 5 years, we've made a step change in the research and innovation landscape of the Philippines.
How many more grants are you looking to give in the remainder of the STRIDE program?
We've around 10 or 15 more to offer. We're starting to get more industrial contribution to the grants, and so we're about to launch some which have a 50% input from industry. So the more input we get from industry, the further we'll be able to stretch our money. The normal size is not the average size, but the normal size is about 4.5 million pesos, duration of 1 year. We've given 1 or 2 that are larger and some that are smaller.
How important is science and technology in fostering economic growth, especially for a developing country like the Philippines?
If we look at other countries around the world, it is possible at some stage in economic development to compete on the basis of high volumes of people being paid low amounts of money. And to some extent the Philippines has done that in the past. But it's changing because the standard of living in the Philippines for many Filipinos is rising, although there is still a poverty problem. But it's harder for the Philippines to compete compete on cost only, because other countries can undercut. So the next natural step is to start to build a knowledge economy, and that knowledge economy has to include some science and technology. Only then, by adding value to what we do in the Philippines, can we continue economic growth.
You're seeing progress towards that direction.
Absolutely, yeah. Some of the industries in the Philippines are very high-tech. Some of them are working with automotive electronics, with Internet of Things. The chemical industries are doing some very clever things as well. And so the input of knowledge into what the Philippines does is adding value and therefore improving economic growth.
Given that back-to-back central bank decisions, BOJ done, Federal Reserve done, what does that do for the peso?
Well, let's take a look. Peso, you know what, it has been weakening of late for more days than not. This week it has weakened. We're now down to about 47.88. That is amongst the weakest in, I believe, for the last 3 months of the year. But look, the point is that this is out of the way now, right? This is the one thing that a lot of traders and investors and forecasters have been looking to determine, is the Fed going to hike or not? By and large, market expectations were that they will not. However, there is quite some voices in dissent now that they should have done so this time and gotten it out of the way instead of kicking the can down the road. In any case, in offshore trade, the dollar is weakening. It has slid against a basket of major currencies, which means conversely that the peso should gain a little bit of ground right now. Although remember what Finance Secretary Dominguez has said, he'd rather to keep the peso between the 47-48 range to, you know, give a fillip to exports.
When you look at it also, the last quarter of the year, you see a sustained inflow in terms of OFW remittances. And the S&P did mention the fact that, you know, a sustained supervision by the BSP and perhaps a diversified, issues in the capital markets is going to help that sector even get better. And exporters obviously are looking at these price gauges to make sure that they're able to be just as competitive. So again, fourth quarter, a few more signals to look at beyond the externalities.
And also given that, you know, the peso weakening, we see this trend, and also the capital, the outflows, the funds, foreign net outflows that we've seen just really getting out of the country. And of course, it goes into
straight days.
And it goes into, you know, business sentiment and confidence in the economy.
I guess the problem at this stage is that they can't distinguish. How do you quantify how much the Fed decision contributes to that outflows, and how much of it is domestic policy related?
And perception relation as well in terms of these portfolio funds, which actually have quite more footloose.
Because we have heard arguments on both sides of the camp.
Absolutely.
All right, that's it for us today, Thursday, September 22nd. I'm Jean De Castro.
And I'm Quinton Pastrana.
And I'm Regina Lay. Keep it here for more market moving news.
Divisions in the ranks. The split Fed says it needs to see more evidence of progress, but indicates a hike is coming this year. Hanjin Shipping wins some breathing space, but the receivership court says the company may be beyond saving. And Fonterra's earnings jump as lower milk prices boost income from products such as cheese and baby formula. Welcome to Daybreak Asia, coming to you live from our Asia headquarters here in Hong Kong and streaming on mobile and Bloomberg.com. I'm Yvonne Mann. Let's go straight to the market opens now. The latest on how markets are reacting to the Fed decision as well as the Bank of Japan. Here's Sherry Ann. Sherry.
Thank you, Yvonne. So we are seeing already the positive sentiment just filtering in through the Asia markets today after Wall Street gained across the board. We are seeing the ASX 200 gaining 0.2%, climbing for 3 consecutive sessions. The Kospi has been up all week, is now again gaining 0.7%. New Zealand stocks up 0.5% despite the RBNZ holding rates unchanged, but giving signals that they might cut rates later this year. Analysts saying that we might see another rate cut in November and even more rate cuts next year. So what we're seeing with the Kiwi dollar is that after that announcement, we saw it just lose ground, but it's currently just recouping those losses.